This video is going to talk about a concept that you can incorporate into your trading strategy, and it's called profiting off of the sympathy play. Now, first of all, what is a sympathy play? Well, a sympathy play is when you have a stock that performs well because another stock with a similar situation has already risen. Okay, so you have a gold stock makes a huge move, right? So then other gold stocks start making big moves because of that first gold stock that made a big move. Or maybe you have a cloud computing stock gets bought out. So then other cloud computing stocks start doing well. Or you have a bottom play does very well. So then charts that also look like good bottom plays start doing well, right? It's all about psychology, okay? If one stock performed well for a certain reason, then it is comprehensible to think that a separate stock could perform well for similar reasons. And we already talked about some examples, okay? So now in this video, we're going to point out some actual real examples that we saw happen in real time over the last couple months. Now, first of all, the first stock we'll focus on is LEXG. LEXG was a lithium stock that in April of 2011 was around $1. But then it rose all the way to $10. Okay? Remember, this is a lithium company. So, under the thinking of looking for sympathy plays, you would then say, okay, if this lithium stock that started out as a penny stock has gone from $1 to $10, maybe other lithium penny stocks will do well also. That would be the thinking of somebody who's looking for a sympathy play to LEXG. So let us show you some other lithium stocks. Tucana Lithium. You can see in late April it went from 5 cents up to 30 cents. That's because LEXG had made a huge move, okay? So people were looking for the next lithium stock to make a big move. So you had a stock like TUCA, Tucana Lithium, made a huge move from, like we said, 5 cents up to 30 cents. Okay? There's another lithium stock at the time. It made a move from 20 cents all the way up to $1.92. Lithium Corp, LTUM. You can see that these moves all happened around the time LEXG, was rising. Okay? That's because LEXG did so well. The psychology of traders is to look for a similar play. Look for a similar stock with a similar situation. Okay? So that's what causes sympathy plays. That's what is a sympathy play. LTUM and TUCA were sympathy plays to LEXG. Okay? We'll show another situation. Here we have Jam and Java Corporation, which was a coffee stock that was a penny stock. So you can see in March the stock was around 90 cents. Look what happened over the coming month and a half, 2 months. The stock rose all the way to $6.35. Huge move, right? So just like we showed here with the lithium stocks, if we have a coffee stock doing well, that was a penny stock, now we're going to start looking for other coffee stocks that we think could do well. So, you saw big moves in stocks like HCI, Healthy Coffee International. Went from 0.003 all the way up to 41 cents, an absolutely ridiculous return of over 4,000%. You had another coffee stock, Baristas Coffee Co. Incorporated. Went from 1 penny all the way up to 84 cents. Not bad. Only a return of 8,000%. So, again, notice when these moves happened. BCCI and HCEI made their big moves as Jammin was making its big move. People were looking for the next coffee stock. Just like they were looking for the next lithium stock, they looked for the next coffee stock. So BCCI and HCEI were sympathy plays to Jammin Java, right? Okay? So hopefully this concept is becoming easier and easier to understand. Just recently, again, because these were moves that happened in the spring of 2011, but just recently we had a definite sympathy play. So you had Cannabis Science Incorporated, which is a weed stock, a medical marijuana stock, made a big move from 3 cents all the way up to 25 cents. So over 500%. You can see this huge move that it made. So now, look at a stock like Medical Marijuana Incorporated. Look at the move it made from 2 cents up to 11 cents. So, over 400%. And look, notice as well that this move in MJNA came after the move and during the move that had already started in CBIS. So MJNA got sympathy from the move in CBIS. And you can, if we pull up both the charts on the same chart, you can see MJNA had a delayed reaction to CBIS. This is MJNA's big candle from 2 cents up to 7 cents, after CBIS had already started to make its big move. So MJNA got sympathy to CBIS. Also recently, we've seen double zero stocks like KMAG make big moves. Okay? And sympathy plays are not restricted to just a particular sector, meaning that we saw lithium stocks doing well, coffee stocks doing well, and marijuana stocks doing well. Now let's talk about a technical sympathy play. So this is a double zero stock, right? And there was no news out on this company at all. It was just a double zero stock on a chart that had gone way down, and it bottomed out, so it was a bottom play. So we talked about you can have a bottom play that makes a big move, so similar charts start making big moves as well. Or double zero or triple zero stock makes a big move, so other double zero or triple zero stocks start making big moves as well. So you can see the move that happened in KMAG, right? Now look at a stock like ISIM. KMAG made its big move right around March 2nd, and it really started back in February 22nd. So ISIM, that same day, it made a big move itself from 0025 to 0075. FHRV, the next day, made a huge move from 0017 up to 004 for 100% gains. UNDR just now started to make a big move on March 2nd as well, from 0004 all the way up to 0026. SUGO has started to make a big move from 0005 up to 0018. So all of these double zero stocks are starting to move at the same time. That's because they're all getting sympathy from each other. One double zero stock is doing well, so people start looking for other double zero stocks that will do well. Now we'll show it with bottom plays. You had two in particular that did quite well. So ALZM fell from 6.5 cents down to 005, and then it made a bounce all the way up to 4.8 cents. So that was definitely a bottom play or a bounce play, whatever you want to call it. Now look at ANTS. ANTS, similar chart, fell from 8 cents all the way down into the double zeros, and it made a big bounce from 0023 up to 0075. And then You notice ALZM just made another bounce recently from 0.008 up to 3.3 cents. Well, look at Ants. Ants just did the same thing from 0.003 up to 2.5 cents. So when ALZM started doing well, Ants with a similar chart, ANTS, also did well because they had similar charts. So they both got sympathy to each other. Okay? You had a stock like NSRS, which was huge, which was promoted big time as a gold mining stock. It was a big promotion. You'll also see stocks get sympathy to big time promotions like this, and within the sector. So NSRS was a gold stock. It went from 14 cents all the way up to $1.72. Let's take a look at GDSM, which is a gold stock. Look at this move from 0.014 all the way up to 3.4 cents, a gain of over 2,000%. Notice that GDSM, the interest in GDSM, as you can see by the volume down here, didn't really come until NSRS started to make its big move, because GDSM got sympathy to NSRS. Notice once NSRS made its huge move and then started falling, that's exactly when GDSM started to make its big move, because people started thinking, oh, NSRS is making a huge move. It's a gold stock. Let's look for a gold stock that's even cheaper, and maybe that can make a big move too. It's all psychology, and then it becomes self-fulfilling, and it does indeed end up making a big move. Now, we've shown you a lot of examples of penny stock sympathy plays, but the concept works on big board stocks as well. So you had a stock, INHX, get bought out. It's a biotech stock. It's in the biotech sector. It got bought out in early January. The stock was at $10 at the time, and it got bought out at $24. So using the sympathy play model, we would then look for other biotech stocks that are in the same particular industry as INHX, because those are probably going to do well as well. Because now people, since INHX got bought out, people are going to spread rumors or speculate that maybe another stock similar to INHX is the next one to get bought out. So after this buyout happened, look at the big moves that you saw in a stock like IDIX. From $7 all the way up to $15, a 100% move, which on a big board stock, a 100% move in a matter of weeks is incredible. IDIX would not have made this move if it weren't for INHX getting bought out. ACHN went from $7 up to $12.50 or $13, so 80%. DNDN went from $7 all the way up to $17, so well over 100%. HGSI went from $7 up to $11.50. Okay, these are all biotech stocks. These are all biotech stocks that after INHX got bought out, you saw all of those biotech stocks do well. Okay? You also have something, a major company event, like when a company releases earnings. Other companies in the same sector can benefit. So let's show you an example. So Salesforce.com released earnings in late February, and the stock went from 130 to 146. So that was a well-received earnings report. Salesforce is in the cloud computing sector, so using the sympathy play model, we would say to ourselves, okay, other cloud computing stocks should probably do well because they're going to get sympathy because of the move in Salesforce. So you have stocks like F5 Networks that made nice little bump ups from 124 up to 130. Stocks like Equix that went from 130 up to 140. Stocks like VMware, VMW, that went from 96 up to $102. Oracle is in the same sector, went from 28.70 up above 30. Because of Salesforce being a large cloud computing company, when they posted a good earnings report, then the market says, okay, if they're in cloud computing and they're doing well, then other cloud computing stocks are probably doing well on their earnings as well, so let's buy them also. You see that a lot. And we thought it was important to explain this strategy of sympathy plays and what they were and show people some examples, because if you see a stock make a big move and you missed that move, say you see a stock go up 200% because of a new patent, and you missed that move, right? It's not the end of the world, because with the sympathy play, you can now look for other stocks that have a similar patent or that also maybe just released patent news that haven't ran yet, and then you can buy those in anticipation of them making big moves because of the other stock already having made a big move. So hopefully everybody understands this strategy and can, if they want to, incorporate it into their trading strategy.